Hello and welcome guys to the price action trading channel. In this video we'll discuss about identifying a strong and weak support and resistance level. But before we start, if you are new to this channel, we produce weekly content about price action and how to take trades with only price actions that deals with volume, Fibonacci and moving averages and candlesticks analysis. If you are interested in those type of content, please subscribe to the channel. Now let's start. We are only dealing with support and resistance topic today, and this is mainly for the subscriber who were saying that how to deal with a price action in binary options. That means 1 minute or 5 minutes chart or 2 minutes chart, not more than 5 minutes chart. So I'm going to keep my analysis concentrated on those things, but sorry, do not think of these charts as 1 minute or 2 minutes. You can apply these settings on higher time frames also. Now let's move the chart a bit and do some analysis here. So I'm going to draw a market structure for downtrend, but same things can be applied to an uptrend also. So let's start for a downtrend. I'll draw a downtrend like this. Market move up, down, and then up. Then let's go to down. Okay. Ignore some of the drawing mistakes, but this is just for analysis. Now that this structure is done, I'm going to draw another market structure also for downtrend, but I'll quickly fast forward this video so that we can discuss some of the other details. Now that our market structure for downtrend is done, I'm going to say something that some of you will not agree to it. Some of you guys say that the number of touches the support or resistance have is what makes the support and resistance stronger. Let's say if you are having a support and it has been hit by 3 or 4 times, it is stronger. And let's say some of the other guys say that if it has been hit more than 3 or 4 times, it is weaker. But that is not the case here. If your support or resistance in downtrend and support in an uptrend are always stronger. So I have drawn a downtrend. So we'll look for the resistance area only. It does not mean that we'll not look for the support area, but the likelihood of reversing a downtrend from a support happens very not quite often actually. So if we think of this as a downtrend market, we'll be only looking for the resistance area. We will also be looking into the support area, but the main focus in the downtrend should be the resistance area. Now, this is how many times it has been touched is like 3, 4 times, 5 times, 1, 2, 3, 4, 5, and this is 1, 2, 3. So some of you guys will say this is a much stronger resistance level than this, but I would say this is a stronger level of resistance than this. The reason is that it is already a downtrend, and you see the sellers keep bouncing the market down, keep sending the market down from here. Every time it hits the market here, if I draw a line here, something like this. So you see the market structure was broken. This was a strong downtrend and the market broke this structure. Now it has been touched, and every time the market was touched here, the sellers keep sending the market down and then again down. It sort of like created a double top here, but we'll not discuss those things here. Now sellers send the market down, again send the market down, and then created a new low, and then it sent the market down. Whereas if you see this level, yes, the market structure was broken here also, But if you see that sellers keep sending the market down, but the buyers keep accumulating the market here. Buyers are coming in, coming in, coming in, and it could be that there could be a lunch session or some of the other things going on. But if you notice closely that this level is like sort of accumulating the market, they are like this is becoming a demand zone, and once the demand zone gets saturated, the market will try to go like this. If I draw something like this, market may go up or may go down. You are not sure of this level. So until and unless it is like going from here, or it gives you some kind of confirmation, you are not sure when and where the market will move here. But the likelihood of going the market down from this structure is strong enough. So this is one of the key points that you need to look for, that you have to go with the trend. If the trend is an uptrend, you have to look for support. If a trend is looking for a going for a downtrend, you have to look for a resistance. And of course, if this becomes like this, I'm not saying that this does not mean that market cannot go down from here, it cannot go down from here, or it cannot go up from here. It can go up, but the likelihood of going the market or sending the market down from this structure is higher. The probability of this structure is higher than this structure. Now, there are other concepts to draw support and resistance line, but we'll discuss about those details later. But one such thing is the trend that we just discussed, and I'll quickly show you the trades that I have taken on these type of structures like strong support and resistance structure, and then we can discuss few other details that you need to keep looking while drawing a strong support and resistance line. And I'll show you the charts how you can identify those strong structures of support and resistance. So let's go to the chart. I've taken this trade. Now this is a Euro GBP chart, and if you look closer, this was a clearly downtrend and the market is trying to break above. Now there is no accumulation. If you look at the bigger chart, there is no accumulation or no demand zone here that the market will try to break above here. Now if I draw a support line, let me draw a support line. You can clearly see that this support line was broken with the pressure of sellers, and now the market is trying to retest it, and that's why I did a put option here. Now also notice that these are big candles. This is a big candle, that means sellers is highly active on this level. Then this is again the big candle, and third candle, this is also a big seller candle, and this is a candlestick pattern actually. Now when these 3 4 candles are formed like big candles and the support and resistance and the trend, you are going with the trend, right? Now all these things will make you win a lot of trades if you just notice the trade and how the market is behaving. Also notice what I said earlier, that support in a downtrend is not likely to hold, but when it becomes resistance, it is likely to hold. And similarly, for an uptrend, resistance is not likely to hold, but when it becomes support, it is likely to hold. So I was in a downtrend here in this trade, and when support became resistance, I did a put here and it was a clear win. So this is how you should think about the market. Now this is Euro USD chart. Now I'm doing the same exact thing here. I'm doing a put option again on a downtrend. If you notice the support line here and downtrend, and when it became resistance or a retest, I did put here and it was clear win. So this is the exact same trade that I took for the earlier trade also, and that's how I read about the market structure. This was the strong market structure. Now let's go to the charts and think about what is the weak trade structure or the market structure that we should avoid and should not trade. And then I'll quickly give you a bonus tip about how to avoid the areas or what areas to avoid for trading. Now let's quickly remove these drawings and then analyze the market. a quick disclaimer that these are just analysis and some of the times they may fail, but in 90 to 95% of chances, these stronger levels are applicable and good enough to trade actually. And in any time frames, if you are analyzing bigger time frame, do analyze the support and resistance in those time frames only. So let's analyze this Euro USD chart. Let's draw some lines. Okay. So let's start from here. It was a downtrend. It was a downtrend, and you're doing your market structure is broken here, right? But you did not get the chance to trade here. If you think about this level, you did not get a chance to trade. But when it becomes resistance, now let's plot another line and make this as an area. This is your level. You did not get a chance here to trade, so you avoid it, and then again it is broken. Now when this downtrend is coming down and it breaks, this support is broken now and it becomes the resistance. Now you get a chance to put here, and if you are an aggressive trader, you maybe did a put here also, but I should avoid it. This was a clear put, and then again you are waiting. Let's do some analysis here. You again did a drawing of support here, but again you did not get a chance to do a put. Now you are waiting. Now let's go to our supports here, and this was also a resistance, previous resistance, right? But you did not get a chance to put here. Now you are waiting for the market. We are actually looking for only the resistance lines. We are not looking for the support line now. So the market is coming down hard and it broke our previous resistance line, and it now you did not get a chance to trade here. If you make a resistance area, actually, if you do this, still you did not get a chance to trade here. Now let's go up. You get a chance here to trade. See this line and this candle. This they try to put the market down, but this was a strong support line. It was market rested for quite some time, and now it became resistance. Sorry, this resistance was broken. Now it became support, and you got a chance to do a call here. And now this was your previous support. Now it is becoming resistance. You get what? 1, 2, and 3 chance. Probably this is too aggressive. This is a good trade, and this would also have been a good trade. Now you are again waiting, and this was your major support line, which was broken by the big candle. Now you are waiting here. You get 1 chance, you get 2 chance, and this is a big candle. You get 3 chance. So you get out of 5 or 6 minutes, maybe 7 minutes, you get 3 trades here, right here. And this is probably the best trade you could have taken. And you could have taken also this trade. This is also a good trade. Market tried to do a fake. I'm sorry, I'm not sure what happened here. So let me just zoom out. Okay, so we were here, right? Okay, so you get a good chance here to trade. This is a good candle to trade. Now you are again waiting. You should now, at this time, you should avoid all these lines and you should try to make new support and resistance line. Now, before I remove all this drawing and move to the next concept, out of these 7, 8 candles or the trades, your probably the best trade would have been this candle would have been your best trade, and the confirmation candle would have been your best trade. The rest of the candles you can avoid, and you should not trade those candles. This candle is purely a confirmation because it broke everything. It broke three resistance line, the support lines. And at this point, you should remove all these drawings and try to make a new support and resistance line. Now I'll quickly remove these drawings, all the drawings, and give you an idea how to make a mindset and avoid those choppy markets. You should avoid this candles also. You should avoid trading here also. And how should you avoid probably not choppy these areas also. Okay, so let's move to the new concept and remove all these drawings. So the best thing to avoid the choppy market is to plot moving averages on the market. Do not take trades based on the moving averages. These are just to avoid the choppiness in the market. There are lots of indicators, but the best one is the moving average. If you're doing a price action, probably moving average is your best friend. So let's plot the moving average here. I'm going to plot moving average exponential, and this will be a EMA 9 moving average. And you can see that the market is barely holding above. That's why I said your best candle would have been this candle and the confirmation candle. After that, you can do a lot of trades here, but I'm going to say how to avoid the choppiness of the market. Notice here how the candles are only crossing the moving averages. They are not going either up or down of the moving averages. So avoid these type of trades. Again, if we move further, avoid these four candles, these 4-5 candles. You should not trade these. Now see here, this is an interesting one. See here, the moving averages is right within the candles. You did not get a chance to trade here because you are not sure because of the high wicks. If you are an aggressive trader, of course, you can plot the support line like this. You can probably plot the support line like this and the resistance line, probably the resistance line like this. Probably you can trade this candle, this candle, this candle, but I'm telling you to avoid the choppiness of the market. Taking the trades is up to you guys. How to avoid these is purely up to you. So avoid these candles or the trades where the moving average is right within the candles. Now see here, this whole area to be avoided. This is the choppiness of the market. If I go back, this is the choppiness. This is again the choppiness. You could have probably taken this would have been your trade. This would have been your trade. Rest of those are the continuation trades. Avoid this. This is again the choppiness in the market, and you should avoid these type of trades. So this is purely based on strong support and resistance. You can trade, of course, barely on the close enough support and resistance, but I'm telling you the concept here is to avoid the choppiness and to trade only on the strong support and resistance areas. Now just the opposite will be the weak. The weakness in the market will be, let's see, I'm going to give you an example of weak resistance area and the weak support line. So this is weak. Same concept here. Downtrend, support is not going to hold. Resistance in an uptrend, it's not going to hold forever. So you were in a downtrend. And you plotted your line here. And it is again ranging on choppiness here. You did not get a chance to trade anywhere here. Probably if you could plot the line here, if you can plot the line here, probably this is the best line. And you only get an opportunity to trade in this area, this candle. Not all these candles are good. I'm not going to mark the all support and resistance line because I'm going to deal with the strong support and resistance line. So this was broken, you did not get a chance. So this is a weak support line. Coming to the concept of strong resistance line or strong, in a downtrend, it's going to be a strong resistance line. So let's see. If I plot something here, let's say if it is going to be, see the level is still not touched. And if I make this an area, now this, see this is a strong level. And you can do this in any time frame. The closer you get is the higher probability that you will lose the trade, because if you are plotting the line here and trying to trade right here, it's okay, but if you plot here and try to trade every first candle that touches, it's the probability of those levels are very smaller, and the chances of losing are very high on those trades. So I hope you guys know now that how to make or how to plot the strong support and resistance line. So I've introduced three concepts here. Trend, go with the trend. Always plot the support and resistance line based on the trends, no matter the time frame. If you are in a downtrend, then a resistance is likely to hold. If you are in an uptrend, then support is likely to hold. So that was the first concept. Second concept is the moving averages and how to avoid the choppiness. And the third concept would be see how the market is behaving and how, if the market, there is no volume in the market. Let's say if you're seeing only like this, let's go to small candles. Now let's see here. You did not get a chance to call or put here. These are very low volume candles and you are not sure whether the market will move up or down. So you should avoid at this level also. Let's quickly go here. Avoid area from this candle to this candle, you're not sure. Avoid this complete area, you're not sure it is right within the moving averages range. So these three concepts can be very helpful, and you can of course backtest all the strategies that I told you. And I hope you guys will now be able to plot stronger support and resistance line. And one thing to keep note of here is that stronger support and resistance line will not occur in like 5-10 minutes or maybe in like 15 minutes. It takes time to get a level to be stronger, either a stronger support or stronger resistance line. So if you're plotting stronger support and resistance line, please do not watch it for like 2 minutes and you should get a stronger support and resistance line. It will take some time to get those stronger support and resistance line. And that's it guys for this video. If you have any further questions, please leave a comment in the comment section. I'll quickly come back to you with the answers. And if you are new to the channel, please like, share and subscribe to the channel. Those small things of yours keep me motivated to make new content and new educational content for you guys. Thank you.